This is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a preview of the Forex trading week ahead. And before we get into that, we just want to show you our disclaimer real quick, just to remind you that this webinar is for illustrative purposes only. So with that, no further ado, let's jump on to our forex-trading-unlocked.com website, and we're going to go to our workstation page where we can look at the the numbers for the week ahead as far as the economic calendar first. So we're going to look at the, let's see, for Sunday, nothing. For Monday, the 11th, we have the GDP for the British pound. That's going to be something that could shake up that currency. And let's see, we have also, for Germany, we have current economic sentiment and current conditions. Those are fairly reasonable numbers that could make a little move in the euro. Then we have, let's see, wage pricing for Australia. Let's see, for Germany on the 13th, we have some good numbers on the 13th in Germany coming out. We have the CPI numbers, which will definitely be watched heavily. And we have PPI coming out in the UK as well as CPI as well. Then we have industrial production for the EU. We have CPI for the US dollar. And let's see, what else do we have? For Japan, we have GDP coming out. That's all on the 13th. And then we have, for the 14th, we have GDP in Germany. We have a couple of CPIs and some of your smaller crosses. For the pound, we have retail sales. For the euro, we have GDP and unemployment. And let's see, we have PPI coming out for the US dollar. And then for the 15th, let's see, we have trade balance in the EU. We have, Eurostat trade NSA, trade balance numbers. Those actually can make the euro move a little bit. Remember, Brexit, even though it's on the table, it's kind of on the background now again. And then let's see, retail sales we have in the U.S. So we have a pretty active economic calendar ahead for the week ahead, not just for the dollar, but also for other currency crosses. So here we have our dollar index. We're going to take a look at this first. So on the daily basis, you can see that the dollar index has been rallying for the past week. It made a new lower move low a little over a week ago, and then all last week it just rallied and rallied and rallied. I think this is a corrective move that's happening in the US dollar because we overall have a sell signal, and technically from what we have here, we had made lower move high, lower move low, lower move high, lower move low. Now we're making a higher move high, but this could also be just in the grand scheme of a major wave where this was one wave down and now we're in the corrective phase. And I think you're going to find strong resistance in the dollar index in this elliptical area that we have right here. So now with that being said, let's look at the euro US dollar and see what's going on there. So the euro US dollar has definitely been in a world of hurt over the past few sessions as it's been breaking and making new move lows. As you can see, it made this low, higher move low here, and then it failed to make a higher move high, fell below this low, and then started to bang support over the last few sessions and settled on its lows on Friday. So right now we have this target zone of around 146 to 109.95. I think this is a really good support area. I don't really think we're going for major lows on the euro US dollar just because I think the dollar index is in a corrective phase before they slide again. Now, if the dollar index really does start to get a monumental rally again going, well, then obviously the euro will be under pressure. But the ranges in the euro has not been very excessive past few months, let alone the past few weeks. So I think that even as we grind support here, even though on the chart it looks like there's a lot of swing trading and lots of opportunities, if you look at the true relative range, like even for Friday where it made new lows, let's see, the range was 110.16 to 110.54 or 55. So you don't even have a full 40 pip range for the euro US dollar. That's kind of significant when you think about a major currency cross that just a few years ago, if it was in this kind of situation, you would probably have a full dollar range versus less than half a dollar range. So especially as you're making new lows. So not much to be expected. I think we could still see if the dollar index continues to rally. This is about your buffer zone where I think you're going to run out of gas and start to see a correction. So we have, let's see, the British pound, US dollar also in Europe. Let's see how this is shaping up. This market failed to make newer move highs as well, and then now has made newer move lows on Friday. But then here's another thing. Look at this. These big days in the pound are not out of the ordinary, and most days there's a pretty decent range in the pound. Over the past week and a half, they've tightened up, and then let's see, on Friday we had, what was it, 27.68 low and 28.26 high. That's another market where you had less than 60 pips in a market that is much wider than the euro US dollar, and it almost had the same type of range. Not very positive for any real true momentum to be established there. Now we have the US dollar Swiss that we're going to take a look at here and see how that one panned out. Okay, so here we have this heavy resistance zone. So the US dollar Swiss is kind of going like the US dollar index is. And I think that they're pretty much in tandem. And if both are going to run out of gas, I think this is a great resistance area here right around parity. The US dollar Swiss has had a lot of trouble getting above and holding above this parity level. And this would be another chance for it to fail once again. And what happens when it fails? It sells off. And the last time it failed, it sold off much more significantly. And I think that if we fail once again and the dollar index starts to get heavy, that we're going to see this dollar index take out this 98 half 50 low right here and make newer move lows, and then we will see a nice new trend of forming in the US dollar Swiss trade. Okay, now let's look at the US dollar JPY. Let's see what's going on over there. So with the Japanese yen, we have some interesting things here. We made a higher move high on Thursday and Friday, and I think that as the US dollar has been gaining strength, the US dollar yen it definitely stands to benefit from it. The irony of it all is that when the US dollar index has been breaking, which it has for mostly the most part of the last month and a half, the US dollar yen was still trading higher. So there's a little divergence where the dollar index may be collapsing. And if it does, it seems to not be affecting this market right now, currently. Right now, as we've made new highs and we're sustaining the trend, as you can see with this upward sloping blue line here, that we're probably going to start to move sideways to higher as we channel through here. And even if we take out the channel a little bit, for us to go sideways and digest in this area would not be outside of the realm of possibility. So this green pivot line at 108.47.8, I think, is a good bias for a direction. Really, the wide range is between 107.886 and 109.286. I think if you're a range trader, you're going to see lots of opportunities to for moves to not manifest over the next week or so as we kind of go sideways with this market. All right, now let's take a look at the AUD USD. All right, Australian dollar, US dollar. This market has made a higher move high, and now it seems to be establishing a higher move low. Overall, it's in a bull trend. Over the past, obviously, 4 months, it's more of a sideways trade, but over the past month and a half, it has maintained this posture of bullish strength against the dollar. Now, let's take a look at the New Zealand dollar, which is also very much in a similar situation as the Aussie. However, this one had made the higher move high and has made a lower move low, calling for potential sideways action in this market for a while. So like I said, that's why I think we're going to have a little digestion in the dollar index because of what's going on with these major currency crosses. So even though it seems like they want to start to unfold a new wave of bearish trading for the next week or so with these other crosses, I would use caution and see how the dollar index starts to wiggle and jiggle as Sunday evening and Monday morning start to emerge. Remember, we have a lot of markets on their highs. There's a lot of things that are coming. I wouldn't say they're unhinged, but they're looking for potential chances to have some nice sell-offs. We have a lot of news, obviously, geopolitically that's going on. Remember, Brexit, even though it's not off the table, is still out there, but right now we're not really giving it too much credence or attention. And I would say that if you want to look for some good swing trades, you'll probably see them in the New Zealand dollar and the Australian dollar, like we just looked at currently. The yen, I think, might be a bit of a tight trade. And then the euro US dollar here, like we started out our excuse me, first currency cross analysis with. This one, I think you do have some potential for this slide, but let's look at what you really have on the table. If the market settled at $110.17, which is where it's at right here, and we're looking for it to fall down into $109.95 to $109.46, we're looking for basically a little more than 50 to 60 pips still left on this slide before it starts to run into some support and probably a lot of choppy market behavior. So that being said, I would be very careful with having expectations to the downside. I think there still is some potential there, but I don't really think that there's much beyond that. And especially, excuse me, if the dollar index starts to really fall apart, I don't even think you're going to even get down into this area. So if the dollar index opens weaker this evening on Sunday evening and starts to trade lower into Monday, then I think that you're going to see some profit taking off of this recent break in the euro US dollar. Remember, you've had 5 sessions of negative trading. Might be a chance for some of the bulls or the bears to take some profits, which would then probably lift this currency up a little bit. So with that being said, we've covered a lot of markets for a little pre-trading week focus. So, and we would see how this ends up, obviously, come next Friday. But right now, we're prepared for Sunday. And if you want to learn more about finding some good buy and sell trading signals, or you can read the book High Probable Japanese Candlestick Patterns. It's available at Amazon.com on paperback and Kindle. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive trading edge in the Forex markets, the stock markets, the futures markets, the equities markets. You name it, you can use them in all of that. So we'll probably be coming out with another video this evening once the markets open up. And until then, enjoy the rest of your weekend. And then remember to have a trading plan when you start to look at the markets. And before you place a trade, always have a plan, know your risk, and be prepared for anything to happen, because it usually does in the markets. Thank you very much. Please like, follow, and share us here on Twitch and